Good afternoon and welcome back to another bar by bar analysis here on my channel. Today is May 2nd, 2022, and today we're looking at a 2000 tick chart for the E-mini S&P 500 futures market. The only indicators that I like to use are a 21 EMA indicator here in blue, a 200 EMA indicator in magenta, and every now and then a volume indicator to help understanding the overall context of the market. But we primarily focus on utilizing price action and market context in order to place our trades. Now, unfortunately for me today, I finished red. I didn't win all my trades. I unfortunately had three separate losses. And I'll go ahead and cover my trades. And I had a few wins today as I've been trying out this failure strategy and I'm getting used to trying to figure out what's the price target that I want to go for. And so I'm continuing to learn the method, but I still think it's beneficial going through some trades, especially post analysis, and see what the market looks like, see where I should have entered, where I shouldn't have entered, and we'll get into it and talk about things. But I hope that you guys had a good trading day. So as we do on this channel, we draw our level of resistance here at overnight highs, and we draw our lows. We draw the support level here at overnight lows. So we're in a bit of a trading range here, and as the day starts, prices had moved to the bottom of the range, broke, tried testing the bottom of this range again before pushing strongly above EMA. So prices were pushing up above EMA. We had a break move to a new high. I had anticipated, I thought the uptrend had played out. 200 EMA was coming down as well with a new high here. First entry long, second entry long, but I didn't want to take it after the uptrend had played out. So I thought, okay, let's try this failure strategy. I'm going to enter short, one tick below this signal bar where everyone's going to try going long. And what happens is the next bar prints, people are in this trade, next bar prints. I'm thinking, okay, this is great. This is a really good, the strategy is working, right? Because people got trapped trying to go long. Prices reverse, they get stopped out. I'm going to catch their stops and ride that momentum. So then this bar prints, I'm in this trade, and it doesn't go that far before prices come back up and then stop me out. So unfortunately, that was a loss for the day. And what ends up happening is not too much later, prices push down exactly where I thought they were going to go. Let me get this out of the way real quick. Down to the bottom of this trading range. So that's essentially what I thought was going to happen is we had this uptrend break, move to a new high, finding resistance off 200 EMA, not pushing to the top of this trading range. So where are we most likely to go? Down to the bottom. I thought, okay, let's try entering that, catch the ride to the bottom, and I missed it. So unfortunately, that was a loss, but that's just the way the market works sometimes. As prices come down here, we have a second entry long showing on an indicator here, but it's fairly easy to find. You have a high here, prices move down and up for a first entry long, down and up for a second entry long. I know that people are going to try entering long here. They're trying to pick a bottom. I'm just, again, with a strategy, I'm going to catch their stops, ride the momentum. People are in that trade and prices reverse and tick one tick below. I had my stop limit, I had a stop order ready. So as soon as prices reversed and came down, they got stopped out and I rode the momentum down. Now, unfortunately, with the wins that I got today, I didn't catch any runners. So I was in one tick below where everyone's stops were. I got the scalp, prices came back up to stop the runner out and then continue down. So unfortunately, no runner there, but that's kind of how that trade played out. For those that are trying to go long here at the bottom of the range, what you need to do is wait for a higher low with room back to the EMA. Don't try taking a second entry long where there's no level of support. You need a little bit more confirmation. You can't just rely on the overnight lows here. You need some sort of higher low or double bottom with room back to the EMA. So we're just going to capitalize on people's mistakes there and ride that down for a scalp. The other thing I forgot to mention is there is a short-term trend that's working down here. So you're going long into that short-term trend. It's not worth trying to go long there. But regardless, we catch the stops, ride that momentum, and then prices come back up to test the EMA one more time, form somewhat of a double bottom here. You have that break move to a new low. So this downtrend is played out. We're looking for prices to reverse, push back above EMA, back up into the trading range. And so that's what happens. Prices push strongly above, no way to enter this really. And then prices start to come down. We have this new high with a first entry long, second entry long that could potentially fail. It's also pretty big here, but we have the new low with a first entry short, second entry short. But I'm not necessarily trying to trade this as a second entry short because this move, it's too big. The move is way too big. We're anticipating for prices to come back up and make a new high, right? According to price action rules, we have this short-term trend that's working up. People can draw that in different ways, but you have a short-term trend working up, break, looking for a new high. Price is somewhat holding here at EMA, and after this strong move, I'm not interested in shorting, but I know other people are. So my thought process was, if prices move down and trap people, I'm going to enter above this signal bar here. Remember, the same idea. People's stops are going to go one tick above this signal bar. So we have an engulfing bar here, and someone asked a question about this on my last video. Do you enter on engulfing bars, or should you, can you? It really depends on the context. It depends on how this bar finishes. And what happened was prices pushed down first, got people into this trade, and then as prices were reversing, I had entered just as the bar was engulfing. Then prices came back a little bit and stopped, but the bar was finished bullish, and then the next bar is just printed, and I was barely out for a scalp. 475 up to 575 is 4 ticks. And if you go to 6.25, that's 6 ticks, and 6.75, that's 8 ticks or 2 points. But again, no runner, you just get the scalp. Prices come back, stop me out, and then make that move trying to make a new high here. Now, as prices were moving a little bit more, we had this new high with the first entry long, second entry long, potentially looking for a failure just because I thought this uptrend had played out. And so I had my stop limit order one tick below where the stops are that were going to be. According to that strategy, people are taking this second entry long, trying to go long after this uptrend had played out with a new or attempted a new extreme. So I was looking for prices to push back down. Had my stop limit order one tick below, and prices continued on. And that's why I love this strategy specifically, because you're letting prices work first. Let the trade work out. If it's going to work out and leave you behind, fine. You're all good. You're not in a trade. You're not losing money. But if the trade were to come back down, you're most likely going to get that momentum and you're going to get that scalp. So no trade there, but I was ready for it anyway. Prices were chopping around a bit in this trading range, and then they broke up into this second tier trading range. You had the new high first entry long, second entry long, huge signal bar, wasn't looking to go long there. You also have this new low first entry short, second entry short that triggered below this bar here, but I'm also not looking to take that failure strategy here. And that's just because we're in a clear range. Prices are finding a level of resistance up here. I'm just going to respect that for what it is. I'm not looking to take any trades. Prices continue up and test that resistance level one more time, and then prices push back down. And prices are finding a level of support down here. And with all these overlapping bars, not looking to trade any of this. Really got to sit it out just a little bit. And again, sorry, my charts marked up so you kind of see what happens, but let's just think about it logically for a second. Prices are consolidating here at the overnight lows, right? It's finding this level of support, and as they break out to the high side, what are we looking for? If prices were finding a level of support here and didn't manage to push lower, we're pushing back up, it's likely we're going to test this area of the range again. It's likely that prices are going to push back up. So that's the context we need to focus on. And let me rewind one bar here. We had a new low here, prices come up for a first entry short, and then prices come up for a second entry short. Some people are going to try picking a top. They see this 200 EMA, they think prices are holding, they enter on a second entry short, and all we're going to do with this strategy is let prices play out and enter long exactly where their stops are, one tick above this signal bar, so that in case they are wrong, we're going to ride prices back up where we think they're going to go. This bar forms one tick above, you're in this trade. You'd be in here at 850 to 950 is 1 point, 300 is 6 ticks, 3050 is 2 points. So even if you're going for 2 points, you would have been out of this trade. Prices come back down to get your runner and come back down to test this EMA again. You have a new high here with a first entry long, second entry long. Some people could argue it's a breakout pullback. I wasn't interested in taking a long here, but prices are slightly holding above 200 EMA here. EMA is being respected as well. I didn't take it, but you could take a long position on this. And what happens is prices continue up and you get a nice runner in there. And you see with the second entry indicator, it's just continuing to go up, not looking to take any further trades. I guess when you see this second entry short hit trigger with this new low, first entry short, second entry short, you could put your stop one tick above this signal bar. It's maybe a little bit risky because you're really trading long into the highs, so you got to be really careful. But even if you had your stop limit order ready, you can see kind of prices play out a little bit, and then it might be better to just take your trade out. The scalp already happened. Prices are continuing to chop along. You're not trying to go long up here. At least that's how I see it. And so prices reach back to the other side of this trading range. I guess it kind of depends on how you had your channel drawn. But prices break that. You have this new high, first entry long, second entry long that triggers above this bearish signal bar, utilizing, the same strategy. You could put your stop one tick below, trying to go short, but it's never filled. Prices continue to chop along a little bit. Try pushing up one more time and then start pushing below. So we just worked from the bottom of the range up to the top of the range, and maybe we have like a trading range, something like this. And now that we're at the top of this trading range, now we anticipate for prices to push back down to the bottom of the range. We have a new high, first entry long, second entry long. That second entry long is triggered above this bar where people are putting their stops below the swing. So if you're going to enter one tick below this signal bar, and as prices come down, you're in this trade and you're out of this trade. Very, very quickly you get that scalp. Prices come back, knock out the runner, so you miss out on that. But that's how I saw that playing out. You get a slight overshoot of this channel as prices work down. What does that mean? Could potentially generate momentum to the opposite end of the channel here. So we just got to be very hesitant about going short. We have prices make a new low, short-term trend working up with a break, looking for a new high. First entry short, second entry short, doji bar. Very aggressive trying to go short. I'd stay away from it. Prices do come down though, and you would have gotten a scalp if you entered even one tick below signal bar. Let me zoom in here just a little bit. So you'd be entering 2-1. Prices come down to 18.50. So that's 10 ticks right there. Even if you're going for 2 points, you're going to be out of that trade. But just be a little cautious. We are looking for the new high. This was the trade that I liked here. So again, that overshoot's most likely going to generate momentum to the opposite end of the trading range. We had a break of short-term trend looking to make that new high, and we do barely. You have a new low here, first entry short, second entry short. I wasn't looking to take the second entry short, but I was looking to trade that failure, anticipating for that momentum to shoot out the opposite end of this channel here. So I had my stop one tick above this signal bar. As soon as I see this bar tick one tick down, I know that people are in the second entry short. So to help them out, I want to help them out of their trades. Where are they going to get out of their trades? Well, they're putting their stop loss orders one tick above where they went short. So I had my limit order ready to go. As prices came up, I got filled 7.75 up to 8.75, just 4 tick move. I was in and out of that trade very quickly. If you're going for 6 ticks, you would have been out of this trade. But if you're going for 8 ticks or 2 points, you would have been stopped out as prices come back down. But that was my thought process behind that trade. So as prices come down, find a level of support here before pushing back up. From this new high here, you have a first entry long, prices come back down, form a double bottom, second entry long with room back to the EMA. I didn't see this in the moment, but looking back at it, that's a place you could enter long. You have room back to the EMA, you would have gotten the scalp. We have this new low right here. Prices kind of move along a little bit. You have a new low, first entry short, second entry short. A little hesitant to be shorting into the lows, so I wasn't interested in that. We have a new low here, first entry short, second entry short that fails. Now with a trade like this, it's a little bit hard to enter one tick above the signal bar for that failure strategy. So I just treated this as a normal entry where you're entering one tick above this nice bullish signal bar and prices push up for the scalp. Now, I've been deleting some things on my chart, so I don't have it now, but you do have a short-term trend working up with a break move to a new high. So you're looking for that new high. You are buying into the highs here, but the other way I saw it is we had prices that were holding below EMA and then this strong push above EMA. Prices come back down to test it. It's holding here at the EMA prices. So I felt confident we'd get at least a scalp there. We have prices pushing short-term trend working up with a break move to a new high. I don't know exactly what I was thinking, but I had this range in play. It might have actually been a little bit lower. I had to extend it as prices went on, but I think I might have had the range, somewhere lower. So when I saw this second entry short, we have just enough room to the EMA for a scalp. That's 2 points right there. I decided to go short there, and I got the scalp. But then my mistake was getting just a little bit too confident. We had a second entry short. Prices have been trending down. I saw this lower high as prices tried pushing up and then finished below EMA, and so I took another short there. Prices came down to get me into that trade and come back up to stop me out. So that's just how it is. I'm not a perfect trader. I'm still getting better myself, but that was a loss for me, and it wiped out a number of scalps that I had gotten. So it is what it is, but yeah. So we are in a bit of a trading range here as we get more price action. We had prices push to the top of this trading range, coming back down to the bottom of this trading range. Now we're anticipating for prices to push back up. We have a new high here. Prices come down to EMA first entry long. Strong push down for a second entry long. You could have a pattern here, but that doesn't mean you take it. Again, we're not trying to pick bottoms. I'm not trying to pick that second entry long. For those that take it, you would have gotten out for the scalp. What I did was wait for a higher low or double bottom with room back to the EMA to form. And that's what we get on this bar right here. We had a short-term trend working down break, attempt at a new low, holding at the level of support here, a lot of room back to the EMA, as well as overnight lows. You have enough for a scalp right there. So I entered there and got the scalp. No runner though, as prices came back to stop me out. That's just how it is some days. So we have prices that are working up, slight short-term trend up where price is trying to go to the top of the trading range. Right, it's clockwork. We're just going back and forth. That's how we have to play it. We have a move going up. This double bottom had reset the count. We have a break, move to a new high. As soon as this next bar formed, people tried going short. Nice bearish bar, closed below EMA. I wasn't looking to go short though. I was interested in taking a long if prices failed because we have so much more room to the highs of this range. So if prices fail, they're going to push up nice. As soon as this bar forms in this trade, up for a scalp, a very nice move above this range here. So that's how you can play something like that if you see it. So prices make a new high, break, attempt at a new high, but then prices push strong below the EMA back into this trading range. Where are we most likely to go? Back to the bottom of this trading range. I saw this as a new high, first entry long, second entry long that failed. Very nice bearish bar. I went short here, and unfortunately, with the way my stop loss strategy works, prices came back up to stop me out because I'm not putting my stop one tick above this signal bar. I feel like I'd be risking too much. So unfortunately, I got stopped out, and then prices went exactly where I thought they were going to go. So that was kind of a pain, but no strategy is perfect. There are trades you're going to win, there are trades you're going to lose, but we're reading the market correctly, and that's what's important. So prices continue to push down. We had a second entry long that triggered down here based on this new high swing. Price come down first entry long, second entry long, but not looking to take a long here. What I wanted to do was trade a failure just in case prices continue down. Put your order one tick below this signal bar where people have their stops trying to go long. And as prices hold here at EMA, prices fail down, you're in this trade and out. Now with the way this trade worked out, my runner got stopped out as well, but you get that scalp in there and prices continue to move. Prices form a new high, first entry long ever so slightly, and then prices come back. Second entry long if there's a trigger above this bar. Now I can't remember whether prices went down first or up first. This was kind of a weird engulfing bar, but I thought if people are trying to go long, I want to enter where their stops are, and I anticipated their stops are going to be one tick below this bar here. So this one was probably a little bit aggressive, and maybe I'm getting carried away trying to see things in every trade, but when I was analyzing it in the moment, I felt fairly confident on this trade. I thought it was worth the risk. Very nice bearish bar forms in this trade and out for a scalp. Now with the automated strategy I had, for some reason my runner got kicked out. It was really weird how it worked. It might have something to do with rhythmic, but I couldn't get a runner there either. Then I think I took one more trade here. We had new low, first entry short, second entry short. If people are going to try going short here, I didn't take this trade, but with this strategy, if you enter one tick above the signal bar here, that's where people's stops are going to be for if they're trying to go short. You could enter one tick above that, and then as prices come up, very easy scalp. So you could potentially enter long one tick above that. But my trade was here. I wasn't looking to go short above this EMA here, even if there is a little bit of room here to the EMA. I just didn't feel comfortable with the number of bullish bars that we had. There was something keeping me out of taking a short there. If I had taken the short, I would have been fine. I would have still made the scalp, but I was more focused on taking a failure back up into the trading range. And again, that was just my thought process at the time. So I had my stop one tick above the swing here. And as prices came up, I got out for a scalp. and realized I probably got lucky with that. Maybe I shouldn't have been trying to take a long. As prices are continuing down, we had a break looking for a new low. And so I just called it a day after that. This is probably, I'm just going to change it to green, a little bit risky, but the scalping strategy still worked for a scalp, no runner, and prices continue down, right? Yep, to make a new low. So this downtrend is played out, but prices continue down, and so the downtrend continues. But anyway, I had been done trading for the day. Overall, a lot of fairly decent setups. What's nice with this strategy is it's given me an opportunity to see more trades play out. So it's not like I'm completely done with second entry shorts, second entry longs. I'm not done with any of that. I'm just expanding my tools so I can see and analyze the market a little bit better. I don't want to miss out on opportunities. I didn't take all of these trades, but these are some trades that I saw. I think there were a number of them where I tried to get into, but they just moved too quickly. So it happens sometimes, but we're trying to read the market correctly. Having runners significantly helps the P&L because that can offset some of the losses here. Because when you have these losses, with how big the ATR was today, I think my stop loss was like 12 or 13 ticks. So what is that? 3 points trading 2, 3 contracts at a time, like it's expensive to lose. But I would have lost even more money if I had put it over the swing. So that's just a strategy I'm going to be trying this week, and we'll see if I can keep it consistent and be profitable doing that. I got some of the best comments on the last video I made on this scalping strategy back on Friday, and it's awesome to see that a lot of people are trying it out and it's helping them and benefiting them. So keep trying to use it, keep testing the parameters that you feel comfortable with. Remember, the goal is to be profitable. So if you're doing something that's working and you're profitable doing it, then keep doing it. Don't change anything. But that's it for today's video. I appreciate all of you for watching. If you like this video, please leave a like, subscribe, turn on post notifications so you know exactly when I post these videos. And if you feel these types of videos could benefit one of your trading buddies or someone new to the market or something, go ahead and send them the link, share the video with them. It doesn't hurt having that additional resource to learn from. That's really all I got for today's video. I will see you guys next time, and as always, thanks for watching.